Your
All
screen
right.
is on, sir.
Yes, sir. The screen is on.
All right, thank you. So I believe others should be able to see my screen. So I'm going to share this. Okay. For those that said they are waiting, I believe the waiting is over now. All right. 1 minute while I start the recording. All right. Tonight we say we'll be doing chapter 6, or we'll be taking ourselves through the chapter 6 of our material. And in the chapter 6, what do we have in the chapter 6? We have non-current assets. Non-current assets.
And
When we're
depreciation.
doing, I know, sir. We have non-current assets as the most important part of that chapter. There's no you have a non-current asset, or there's no you have an asset that you will not be expected to calculate the position on them. Either your asset is a current asset or a non-current asset. I will recap. If you have a non-current asset, I'm not going to say sorry for using the word current asset. If you have a current asset, if you have a non-current asset, there are two things that you should be expecting in your current asset. Two problems that may actually afflict your current assets, your non-current assets. Why do I keep saying current assets? One of them is what? One of them is depreciation. And the brother of depreciation is what we call impairment. As far as non-current asset is concerned, the two challenges, if not challenges, I'm just calling them challenges, because anything that causes reduction in your wealth, you see it as challenges. I'm saying in a literal term, I have 5 naira before, and I have a little challenge that cost me to spend 2 naira out of the 5 naira. I will see that's what kind of problem is this. But if I want to keep my money with me, and there's no the reduction in my money, I will not see it as challenge. But the fact that depreciation, when the depreciation is setting, when impairment is setting also, it causes a problem for the asset. What is the problem that it causes? It causes a reduction in the value of that particular asset. So that is why I'm saying they have two challenges. I'm calling them a challenge. It's not a challenge, not a challenge in your book. I'm just saying for us to understand anything that causes reduction in your wealth, we see it as a challenge. Same as the way non-current asset is seeing depreciation and impairment in their life. Yes. So tonight we say we'll be doing non-current asset and depreciation. We need to note something. Another word for non-current asset. By now I shouldn't be diving or running around that. Another word for non-current asset is what we call fixed assets. What are fixed assets? Well, someone in the class should give me definition of fixed assets. Short one, please. Just one person. I believe we did element of financial statements. I think that was our second or third class. And we gave definition of all these things. What do we understand by the word fixed asset or non-current assets? And give me 4 examples.
Fixed assets, they are assets that are tangible in nature. They are fixed, they can be touched and moved around. Examples are machineries, building, cars, or vehicles,
All right.
vans.
Thank you. I'm throwing the question at someone again. Thank you, Ma. I really appreciate that. I call someone the other. Okay, foodie accountant or Najat. Najat, give me an example of non-current assets and foodie accountant. What do you understand by the word non-current assets?
Okay, sir. Example of non-current assets are machinery, buildings, equipment. Basically, those things that are meant to live more than one accounting period.
Thank you. Before you go, do you see anything that needs to be corrected or needed to be, like, there's a need for you to add something to the definition given by the previous speaker? I believe you listening to her. Okay, you don't see
Yes, I
anything
think
wrong in
the
that.
person mentioned something about tangibility.
Mm-hmm. So what do you want to say about that? Anyone in the house? You know why I'm actually throwing this question to us is that I believe that we have our own layman definition, fine, but there's some word we use that may actually reduce our mark. So she said they are tangible assets that can be that can be touched, seen, and the third one. You see all those attributes that she gave. She's actually right. Fixed assets, they are expected to be a tangible asset, which is why in the new FRS pack, in relation or in addition to what ICANN has done, or let me put it that way, this way, in meeting with the standard, IFRS standard, they are now called non-current assets instead of fixed assets. Because when you're talking of fixed assets, we're talking of non-current assets. Non-current asset has gone beyond only tangible assets. Okay, for example of non-current asset. Now I'm going to list other examples that you guys have not listed. I'm going to mention a trademark as an example of non-current assets. Trademark. I'm going to mention goodwill. I'm going to mention patent rights. And I'm going to mention, which other one should I mention? Which other rights do you know? Copyright.
Copyright.
All these things, yes, all these things. I'm going to say something. Do you have anyone in this class that have seen a copyright before? Anyone in this class, you've seen a copyright before? You've touched a copyright before? Is there anyone saying
No,
anything?
you cannot touch a
Yes,
copyright.
you cannot touch a copyright. It's a right. That is why most of these things are being called rights. But they are asset to the company. What's the definition of asset according to IFRS? They say an asset should be something that is controlled by what? By the entity, in which the benefit, in which is expected to bring in economic benefits to the what? To the entity. You call something an asset. It must be controlled by you. A company can control their goodwill. How do they control their goodwill? By ensuring that they keep up with the quality of the item they are producing or the quality of the goods they are producing. I don't want to mention name of brands, but right now in the market, if I mention 2 or 3 brands, you'll be like, this one, they've actually lost their value in the market. They're go for new products. Let's go for this. That is, they are what their value is depreciating. There is an impairment that is happening to their what to their goodwill. It is an asset. For now, another example I want to cite is that if I mention Dangote now, Dangote Cement, Dangote is still maintaining that champion in the market because the goodwill stands and it is what increasing. A goodwill is an asset to the company. They cannot touch it. Dangote cannot say, oh, go and bring that goodwill. Let's see how big is it now. No. So that is why the word tangibility, when you are, don't use the word tangibility when you are defining a non-current asset. A non-current asset. I'll prefer you saying, defining them in the context of their longevity. Oh, they are assets that are expected to last for more than a year, instead of using the word tangible. Because if you use the word tangible, you cannot cite an example of patent or copyright or goodwill. And they are important parts. They are important assets of the company. I hope that clears that definition that she gave the other time. So, because we don't have much time tonight, and I hope to end this class by at most past 10 or so, and we have a lot to cover. It's going to be fast, and I'm employing every one of us to find our book and our jotter to jot down. And after the class, you can go and visit this class after the section because it's going to be a fast class. Sorry. Notes. Another thing you need to note is that this topic is an examinable topic in ICANN exam. It's not only applicable to foundation, including skills level and professional. You see this non-current asset and acquisition. There's so many things under it, but we'll do the basics here. And if the fact that they're even the basic, we need to understand them. If you understand them perfectly, you don't have a problem solving the questions under them. So tonight, that is the introduction to non-current asset and depreciation. I know if I should be asking us the definition of depreciation now, I know we have a lot to say. And I believe my people, depreciation is not a new thing to every one of us in this class now, because no one wants to be depreciated. If you do not know the definition, you would have prayed that God, I don't want to be a depreciable asset. I don't want to be a depreciable unami. That is, someone is reducing in value, such as that. Short. I'll put it short like that. So tonight, Oh, there's some things we need to know as far as this chapter is concerned.
Sir,
One of
excuse
them
me,
is,
sir. I'm so sorry.
yeah,
Please, I think the
okay.
recording has stopped. got notification that the recording has stopped, so I don't know if we are recording the class or not.
Yes, that's right. It's supposed to have this recording click beside this public stuff here.
Thank you, thank you, thank you. What stop this thing? Good.
It can be network. It is loading back.
It's loading, so I'm trying to wait, so it won't be like the first one. Though we have a backup, the YouTube is downloadable. So if we actually miss that, I don't know why it's rolling. Can that be network? Maybe network or what?
Well, maybe the recording is shy.
Shy. Accountant. Oh, the recording is shy. No recording, why shy you shy? Okay, I think it's back now. Okay, we can continue now. Yeah. So I said earlier that this chapter is a chapter that is examinable in all the levels of ICANN. So if you understand the basic from here, you don't have a problem. So even in the pack, you see this IS 16 quality plant and equipment is an examinable document. They stated it and put it in bold so that you know what you are dealing with. You see, they stated it bold. So there are some standards that governs or that guides this particular chapter. Standard as far as accounting is concerned, accounting standards are concerned. We have number one as IAS 16, International Accounting Standard 16. It is called Property, Plant and Equipment. That is one. Another one is IAS 36. What is the meaning of IAS 36? IAS 36 is what? Impairment. I'll take the two standards again. One is IAS 16, Property, Plant and Equipment. We call it PPE. The other one is IAS 36. That is impairment. Impairment occurs or impairment happens to what? Happens to an intangible asset. Example, goodwill, patent rights, whatever rights, trademark and the rest. So impairment happens to what? Impairments happens to them. So that is why I said you cannot be defining NCA, sorry, we call NCA non-current assets and be saying using the word tangible, like all the NCA must be tangible. No, because they are what? It's a combination of both tangible and intangible assets right now. So we need to note that. And again, tonight we already know what we're doing. So I'm trying to do something. This end of the year adjustment. The end of the year adjustment is actually explaining to us that when we are starting a new financial year, what are those things we need to take note as far as this chapter is concerned. During the financial year, what are those things we need to take note? During the year end, what are those things we need to take note as far as this chapter is concerned? For example, when we're starting the new financial year, our assets, our liability, and the capital account, the GN, that contains the account that we brought forward at the end of the year. So let me take a water. So sorry, I was drinking water. I went to take water. So all these explanation they are making here are just for you to know that if you are starting a new financial year, meaning that if you're starting a new accounting year, what do my financial year mean? That we end our financial period by July every month. So by August, we're starting a new one. Then when you're starting a new year, will be a new financial year to you. And for those that end the financial year in December, they're starting a new one in January. So we're saying when you're starting your new financial year, whatever balance you have in your assets, your liability, as at, okay, let's say this is the beginning of 2024. As at 2023 year and as at December 31st, 2023, you are carrying those balance as beginning balance for what? For this new year 2024. So you have an asset last year after your depreciation and everything has been calculated, impairment, everything has been taken note of. So let's say your assets, your goodwill value as a last year now, year end, after taking note of impairment, whatever impairment that happens, after taking note of everything, so you are now having 14 naira as goodwill. So when you're starting this new year, you are bringing that 14 naira as the opening balance of this current year. So they say at the start of the financial year, the asset liability capital account in the general ledger contains the balance brought forward. That is it. And we've demonstrated how to determine our balance brought forward during our last class. So a balance brought forward should not be a new thing to us. That is telling us after necessary adjustment, what are the adjustments in this place? Adjustment like, oh, we calculated depreciation, we calculated impairment, we take note of addition to the assets. There are those things you need to take note of. Who is that? They take note of addition to the assets. Abiola Godwin, if you're not ready, you can just remove yourself from this class. Please, do not disturb us. Yeah, let's continue, guys. Yeah, so what we're saying in essence is that whatever balance you have from last year and any addition you're having this year, don't let me even go to addition yet. Whatever balance you're having from last year, then that balance is going to be the beginning balance for this year. So when what we're saying about it during the financial year is that during the financial year, you purchase additional non-current assets. Oh, our last asset as at beginning of this year was 14 naira. Our generator cost 14 naira. Fine. PPE itself, when we're using the word PPE, it encompasses not only one asset. Your building is inclusive, your plant and machinery is inclusive, your what's it called again? Your furniture and fittings is inclusive, your computer equipment is inclusive. So the general name for all these assets now is what we call property, plant, and equipment. The only thing that is not added to the property, plant, and equipment are the intangible assets. I hope this clarifies this tangible and intangible. So all the tangible assets that your company might have falls under PPE, property, plant, and equipment. While the intangible ones falls under what? The intangible ones will be listed under the PPE in the face of your financial position. So I'm expecting a question which I will answer. I will ask myself and I'm going to answer. So people must have seen like, oh, what about those of us that in our financial statement we are seeing something like work in progress? Work in progress. Yes, PPE sometimes shows work in progress. Okay, should I go there? Don't let me go there for this level. Don't let me go there. No one will ask you about that. But for learning's sake, you would have seen some financial statement showing work in progress. It will still be classified as an asset under your PPE because they believe that all those money you are expending, probably you are doing a project in which the project is still under development phase. The accountant in the house, I'm going to give you this as a bonus. If your company is embarking on a project, let's say you are building a new factory, all the costs the company spend on that factory, do not expense it. For the accountant in the house, just a free bonus. You're not going to expense it. And if they ask you, tell them like until the cost is what, until the building is what, until the building is completed. They see in their development phase. There's accounting standard that back everything up. So all those costs will be what will be capitalized. And what you can put them in your work in progress until the project is completed. Let's say the project is now completed. How will we now treat those things? You now apportion them to where they actually relate. That is for those people in practice. Thank you. So during financial year, whatever assets you acquire, you will be added to what? To the existing balance. And now at the end of the financial statement again, whatever balance you still have, the same way I've explained the end, I've explained the opening, I've explained it during the year. So this one is just to let you understand, like those are the things that causes adjustment into your financial statement. So it's saying adjustment are needed for what? Opening and closing inventory, or opening and closing balances, accrued expenses and prepaid expenses. What do you understand by the word accrued and prepaid expenses? When we say something is a prepaid expenses, that means expenses that you incur in which the benefit is yet to be enjoyed. Why accrued expenses are those ones that what? Are those ones that you've enjoyed and you are here to what? You are here to pay for them. You will pay with your debt. So that is that about that. So the important thing, all these ones are just to give us an highlight, highlight into what we'll be doing tonight. So in so to continue this aspect, we're going to move straight up to the non-current asset, and I will love every one of us to jot down here. Please, I'm urging every of us to take our book and our pen to jot that. So when we're saying a non-current asset, what do we mean by the word non-current asset? Number one, you need to note, one thing you need to note is that the accounting standard that take care or that guides the non-current assets is IS 16, which we call property, plant, and equipment. Be right, me, this is what I'm not dictating from the material. So please, be writing as they're bringing it. I will see the material is relevant. You can see most of the things I will be saying will be in this material also, because it might not be the same word or be the same whatever. Just make sure you are writing down, and I will be throwing questions to us because we don't have much time. So you need to note that the standard that actually take care of governs the non-current asset is IS 16, property, plant, and equipment. So I'm going to give a definition of non-current assets. Okay, I have one definition here saying a non-current asset is an asset which is used by the business over a number of years. I said the other time, I said, do not capitalize your definition on what? On tangibility. Capitalize it on what? The number of years. Now they're saying they are assets that are used by the business over a number of years. That is one definition. There's so many definitions. That is, they are the assets that are used by the business for more than one accounting period. They can be in two forms. One form is to be a tangible non-current asset, and what? Intangible non-current asset. When we're talking of tangible non-current assets are those ones that you can see, you can touch, you can even knock them if you like. That is, you can feel their presence, you can touch them, you can see them. Those are your laptop, your motor vehicle, your generator, everything that falls under property, plants, and equipment. Physical assets. According to this text, it's saying they are physical assets such as property, that is land and building, plant and equipment, including motor vehicle, generator, laptops, all other assets that your company has that you can see. There's some company that has other assets that would not know. Okay, let me ask an example. Let me ask a question, a short one. A short one. My company sells beef. My company sells beef. So the knife, the cutlass, everything that we use in actually turning our cow to meat or to beef, I have the intention of making them an asset. Oh, this knife, I love this knife. I love this knife. These cutlass I'm using, they are the asset of my company. So the next question is that which industry do you operate from, or what does your company do? So I'm telling you now that what my company do is that my company sells beef, and I'm telling you that my knife, my cutlass is an asset to me. Will you agree with me, or you have a counter? You have something to counter that?
Well, sir, I will actually agree because it is a form of machinery
It's a form
to
of
the company.
machinery. All right, but the reason I'm asking this question is not because they are machinery. Please, whenever you're answering any icon question, the question might look cheap to you. This question is cheap. It might look cheap to you, but what they need is that they need you to speak as an accountant. Oh, okay, they're actually a machinery. You can't stop there. What you need is that give them something that will convince them that you actually know what you're saying. So I'm going to tell you that my knife, my cutlass, they are assets to the company because according to IS, according to accounting standard, assets are resources controlled by the entity, in which whatever economic benefit that is from the knife or the cutlass will be enjoyed. Sorry, the usage of the cutlass or whatever will bring economic benefit to the company. Because if they do not see this cutlass and this knife, they are not going to what? All the ram or the cow that they have, they will not be able to kill them. And they're not going to make money. So they are assets because the company controls the usage. Are you with me? The company controls it, so they are assets to me as a company. And again, I can give you a counter answer to that. I know they are not an asset, but don't let us go there. There's something they call capitalization threshold. So let's say I buy the knife from Aboki for 500 naira, and I'm saying, oh, they are assets of the company, and the company capitalization threshold is 5 million naira. Capitalization threshold means that the capitalization threshold is used to determine the materiality of the cost to the company. My name is Afis. If I lost 1,000 naira today, is the money material to me? Oma is material to me because I don't have money. So let's say Otedola lost. So Otedola went for a conference and he was holding a cash of 50,000. And during the meet and greet or whatever, he mistakenly picked up that money and he couldn't find it again. So let me throw the question to Foodie accountant. Are you telling me 50,000 naira is material to Otedola?
Come again,
This
please.
call?
It's not
You're
material.
not coming again. Someone else. Najat.
Otedola is billionaire now. It's not.
It's not because Otedola is billionaire. Yes, it's because Otedola is billionaire. So I'm saying, is the money material to him? No, he himself will not be able to say it, because that is that is one thing accountants, or let me say, that is one thing accounting standard are going to tell is they are trying to explain to you, like, you need to know the materiality. Oh, the company lost, Dangote company lost 50,000 naira, and you expect Dangote to be sad over that, or the accountant in charge to be sad. No, we're not saying they should give room for fraud, but we're saying this money is not material for them. It's not a money that can actually impair their decision making. So I myself now, if I lost 1,000 naira, what you go tell me? Because I know what I want. I know my worth financially. So what we're saying is that you need to know the capitalization threshold. This capitalization threshold, I actually went to this because I was trying to explain. You want to give a counter answer to that, but it's not necessary. But for knowledge sake, we need to know that there's something in accounting we call materiality. There's something in accounting we call capitalization threshold. So every company has their capitalization threshold. You can go to your company, ask your manager or ask your accountant, sir, what is our capitalization threshold? So those things will let you know the company's risk appetite. I'm going into audit again. Sorry, sir. Sorry, guys. So I'm not going to diverse too much because I don't have much time. You can ask your accountant in the office, like, in our company, do we have capitalization threshold? If they say yes, ask them how much is our capitalization threshold. They'll tell you our capitalization threshold is 1 million. That means if the company, I'm not saying they are not going to lose money like that, or they're not going to lose money like that. So not like they will now be nonchalant and decided to lose the 1 million naira because the threshold is 1 million. No, there's some condition that might warrant them to make a loss. That means the loss must not be more than 1 million naira. We can still take our risk appetite is still within that range. We can still take in that. That's the meaning. When you get to the office tomorrow, you can ask your accountants. Thank you. So not to waste our time, we've explained the tangible non-current asset and we've explained the intangible non-current asset. So I've given us the example of intangible non-current asset before. It's not the first time. So goodwill, trademark, copyright
Sorry,
are the example.
we can't see, like, the screen is on, but we can't see the notes again.
Okay, I know. I'll go back there. That's not even okay. I'll go back there. Someone was getting on the other time. Sorry if I didn't observe you. Adeyemi,
Good evening, sir.
good evening. Please make it quick. I don't have much time.
I regards the threshold. So I observed something in my organization. So they call it fueling threshold. So I don't know. Considering what you have also explained now, can you please explain to us? So we have something we call fueling threshold. So
Okay.
and as based on my understanding, I believe that the limit to the kind of fuel, the amount of fuel they can take for a period.
Okay. Okay, Mr. Adeyemi, it's a nice question actually. Thank you. I shouldn't answer because you're not paying me for consultancy. But I will do that, no problem. So that is one of our this in accounting or in audits. Your internal audit must have set that. There's every firm is expected to have an internal auditor, which will build around the company what we call an internal control. So those are the control in place in your company. They are one of the controls in place that, oh, this control is for us to what? To ensure that whatever fuel we're buying for each month must not be more than this. We cannot buy fuel more than this. That is not the amount that a company can lose. That is to maintain check and balances. There's something we call cost control. In cost, some of you doing cost account, okay, management accounting, you will still get to a place where they do cost control. So they teach you about yes, wealth maximize, what's that? Okay, profit maximization and cost minimization. So they are looking for a measure to put in place to ensure that the management maximizes the profit while minimizing their costs. For example, how can we manage 12,000 naira diesel to generate an income of 50 million? That is what they are trying to reduce their costs in order to what? To maximize their profits. That is what your company is doing. That is a cost control. It's part of threshold, it's part of control in place. So it's not capitalization threshold. That threshold, there are so many thresholds. Capitalization threshold means that can we, if we spend 20 million, should we capitalize it or expense it? So that's what I'm saying. It's a deep aspect of accounting. Don't let us go there. But what your company is doing is a cost control. Yeah. Let me tell you another, let me teach you another cost control that you might be expecting in your company soon. Sorry to say that there's something we call staff layoff. They will lay off some staff when they see that they are not adding much value. In order to what they call it reduction in their overhead. You might not see it too. I'm just saying. That's another cost control, reduction in the overhead, laying off some staff to ensure that we have the many staff are the one that actually adding value to the company. Hmm? So when they lay off some of them, they might pay them off. Mind you, the money they pay them off, they know they will recover that money in 6 months because they will not be paying their salary for the next 6 months. While the rest of you guys will do the work effectively. You might even increase your own salary if you are one of those people that they are going to retain. So that's that. Your own company is doing cost control. That's cost control. Internal control check. Those are one of the internal control, ensuring that they are not spending too much. That is what they're doing. Thank you. I hope that answers your question. So to continue what we're doing, yeah, we okay. So we've done that. There is a need for us to now we move to IS 16. IS 16 define quality plant and equipment as what? Tangible. PPE has tangible. There are tangible items that are held for use. That is, this definition actually has two forms. But when you are defining them in your own book, you don't need to break them down like this. You can write them together. But the explanation warrants you to like explain each of these aspects. There are salient features. There are some salient features in this definition. So how do we explain IS 16? Who is this now? Can I do to this one? In the class line. Sorry, guys. Please, if you guys are not able to join the class, you can actually send a message instead of calling. You don't need to call. Sometimes it will disturb this network. Thank you. So if you're having challenge joining, there's no how you, if you cannot join the Google Meet, you can join the YouTube class, please. And any other question you have after, you can drop them for me after. I'll attend to them after the class. So thank you. So to continue, IS 16. IS 16 says, how do they define IS 16? They are tangible assets that are held for use. One thing we need to know, there are two things I want us to know in this definition. Is anyone following me? Hello?
Yes, sir.
Yes, sir.
Yes, sir.
All right, I need to
Can you
confirm
please
so
see
that.
this the notes on the screen, please? Thank you.
Okay, so IS 16 defines PPE as tangible items that are held for use. One thing we need to know is that they are held for use. That is what they ought to be using. They are meant for usage. This is what I'm saying. I'm saying the word held for use is because this definition you're seeing here is somehow similar to definition of inventory, IAS 2. So the only thing that differs is the held for use. Why inventory is what held for sales. That's what I'm saying. Do not make mistake, and you must add that definition when you are giving definition of IAS 16 and IAS 2. So they are kind of, you might have forgotten. It's a salient picture you need to take note of. They are assets that are held for use. What do we mean by the word held for use? Because your laptop, your motor vehicle, what are they meant for? They are meant for usage. You are meant to use them in what? In the production or supply of goods or services for rentals to others or for administrative purposes, and they are expected to be used for more than one accounting period. That is your definition. I'll bring it again.
I can't hear you. I can't hear you, sir.
I think it's his network.
I think there's disruption in his network, or probably a call came in.
It's probably a call, maybe a call disrupted his connectivity.
Hello, please, you stay online.
You are all waiting.
Yes, sir.
Okay.
Sorry, I can't hear anything. Is it my network?
No, it's
Yeah,
everyone.
we are all waiting for the. We are all waiting for. Maybe he has a network challenge. That's what we explained.
Oh, okay. Thank you, guys.
Hello, can anyone hear me?
Yes, sir.
Yes, sir.
Welcome back, sir.
So I've been gone. Hey God, my goodness.
I
I
thought you
didn't
were
know.
aware. Oh
I didn't know.
my God.
I was asking a question and I discovered that no one is saying anything.
Oh my God.
Someone sent me a message now for the past 5 minutes.
Yes, I just sent the message. I thought you were aware.
I'm not so good.
Oh my God.
So when I was mentioning initial recognition and
We are not here. You stopped at when you were differentiating between IAS 16 and IAS 2, and you are talking about
yay.
furthermore about IAS 16.
Ah. Okay, I'll take it back.
Thank
Please,
you, sir.
if
Thank
I'm
you,
not
sir.
saying it, now, if I want to go, if I want to excuse myself, I'll let you guys know,
No, we
please.
thought the network took you off.
It's network. I'm saying, like, please, you can just notify me or by
Oh,
message or
okay,
something.
okay. Okay, sir.
All right, I'll take it back. So I was saying you should take note
We can't see
of
your
the
screen,
word.
sir.
Okay. How about now?
Yes, we are
Yeah,
good.
the screen is on.
Yeah, we are good now. Yes, sir.
Okay. Okay. I was saying I've explained IS or IS system. So I said they are assets. They are tangible assets. We know they are assets, fine. So they are tangible items that are held for use in the production or supply of goods or services. So did you get the part where I was explaining the supply, the production?
No, sir.
No, sir.
No, sir. You stopped at defining IAS 16 definition of PPE.
Okay. I said whenever you are defining IS system, you need to take note of the word held for use because this definition is saying they are tangible items. Starting from tangible means that you can touch them. This is no non-current asset now. We're saying the tangible aspect of this non-current asset is the IS system. So they are held for use. That is, whatever assets that will be coming into this PPE, they must be owned by the company, and the company must be ready to use them. That is, they are meant for usage. And I started an example earlier. Probably you didn't hear me. I said my company is the production of fruit juice. Hmm? I have a dicer and I have a blender that I use in making these things. That is, this definition is not telling us like they are assets that are held for use. I own them already. I've purchased them, both dicer and blender I'm using. I've held them for use in the production. I'm producing one. What am I producing? I'm producing a fruit juice. Now, in the process of production, I'm going to use them. That means they've qualified to be a PPE for me. In the production or supply of goods or services. Now, for supply, and I have a motor van, I have a Camry that I use for my delivery. They are part of my PPE because I use them. I am holding on to this Camry because they are meant to be used in the production or supply of goods. And for services, the laptop you are using to reply emails of your clients. Oh, kind reminder on our invoice number, invoice reference number, so latest, so please kindly make arrangements for the payment and settlement. So all those things you're doing, you are rendering a service with the use of the laptop, which is bringing economic benefit to the company. For renters to others, those buildings that you are letting them out. They are bringing what to the company? They're bringing income. And for administrative purposes in the sense that the building that your company is using, that you staff of the company are using yourself, is owned by your company. They are being used because your company needs a physical presence. So the building is being maintained by your company because they are part of your operation. Are you getting it?
Yes,
I've gone
sir.
again.
Yes, sir.
Yes, sir. We are
Okay.
Yes,
getting you,
So
sir.
and
yes, sir. Yes, sir.
all of these things we're saying, they are expected to last for more than one accounting period. The thing is, they're expected to last for more than one accounting period. So I'm going to say, I think this my network is kind of somehow tonight. I will want two people to just, if you know you're okay, food accountant, Najat, you can unmute your mic, please. If you know your background is silent, if you know it's not silent, you can just mute yourself, just maintain your what's it called like that. If you know your present is your background is not noisy, so that if I ask question, I can know someone is actually following me because this my network is kind of frustrating tonight. So I'm going to go into recognition and measurement. When we're saying measurement and recognition, we need to know that, ask ourselves, how do we measure the item of PPE? One thing, there are two ways in which we can measure the item of PPE. One is the initial measurement and subsequent measurement. I'm going to pick that again. So there are two ways in which you can measure the word measurement. You're seeing it on this on my screen. So there are two ways we can
The network is really terrible. I can't hear you again now.
So are you there?
No, we lost him.
Oh, okay. Message.
We will not lost him. Oh.
Hello, sir.
And this topic is very important.
I've notified. I hope you will be back soon.
Okay, thank you.
Really again play network
Thank
tonight.
I think he's now aware that I think he is aware now.
I left a message on WhatsApp already that he's out of the call again. So I don't know.
It seems village people they follow his own network.
I think this one don't pass village people safe. If not them, they for don't forgive since.
Change your class. Did someone get what he said about the difference between IS2, which is inventory, and IS16, which is PPE? He was saying about network.
Yeah,
Yes.
it's
You've already made mention of that since now. He has even moved on from that. He was saying that,
Yeah.
system is about PPE, property, plants, and equipment. And he made mention that PPE are held for use. But as for
Mm,
IAS2, they are for
yeah.
inventories. So they are
Yes.
held for sale. So that's the difference.
Okay.
One
All
is
right.
held
Thank
yes,
for
yes,
you.
that's
use
it.
and the
That's
other is
it.
held for sale.
That's what
Oh,
yes,
okay.
that's the major difference.
Okay.
Please let me ask this as well. It was the last statement he made, like initial something, subsequent something. What was the something from? I forgot it. I did not get it
Measurement of
now.
people. He said measure is
Okay,
measurement
thank
of
you.
people.
Thank you. Yeah, thank you.
Hello, hello.
Yes,
Welcome
sir.
back, sir.
You are
So
with you, sir.
we are at this point, we should postpone the class because I don't know. The network is bad tonight, like, and I wish we could just. Okay, let's try the last time, please. Let's try the last time. Sorry, everyone.
Okay.
I don't know what
Mhm.
the problem this
Please
morning.
share your screen, sir. Oh, is it?
My screen, I
You were
have
saying two
offered.
ways to measure PP.
Ma, what do you say, ma?
You were talking about ways to measure PPE.
Okay, I've even gone past that. Just-
You have to
Okay,
come back to that to how to mention it, please. Thank you.
we'll come back. We'll come back. For those who have sent me message, please, thank you. Because now, okay,
Certain call of us.
wait. Can you see my screen now? No, it's not even present
No,
the.
I'm
No.
not seeing it. Oh.
I can't even present my screen. Like the option is not even visible again. Yeah, that is not serious. Ah, please, guys. I want us to let's do this then. Mm, do you have the material? Okay, fine. It's back. Oh. Okay. So I was talking about the measurement of God. If you can hear me, it has gone from my end. Oh. Please, I will have to don't let me present my screen, please.
Okay.
I don't know.
Sorry, sir, but your voice is
Please, sir, can you post the material on the group, sir? Please.
The material is there already. It's the same FA textbook. So that's what I'm about to say. I will tag it again.
Teacher is not there.
I'll do that again. Is there? I'll because we don't have more than 2 minutes. So I'm going to forward it. Or we have someone else that can present. Let me share it first. Is anyone using laptop?
Well, my phone can.
Oh, your
I can
phone, your
actually. I can split my phone to two. So the present, but I don't really know how to do that presentation. But I can split it to two, whereby I can share that. But I don't know how to
this is what you
present
do.
it.
This is what you do. You can see there are some buttons beneath this.
I can present.
You can present, eh? Okay. Let me share the material
Yes.
again. Let me share the material first. I think Nadia shared the material already. Thank you.
Yes, I just
Thank
did.
you. Thank you. The material is on the platform for FA1. FA2, I'm going to forward to you people now. So someone should present. share your screen. I'll just take it off from there. Who is share? Is share on Jonah? You can take over my screen. You don't have this time. Oh.
So please
Okay.
just continue. We'll go through the material later.
Okay.
Also, can you just explain it to us without the sharing of the screen?
I'll do that. That's not a problem to me. Even I don't use the material. I don't know why I went to use material today fully. But it has happened. It has happened. Who is this person? You asked me for material. You know I'm busy. I send the material to you personally. You are still asking me for MA. Then now I'll be sending you MA material. If you're on this call, please reach out later, not now. Is anyone following me? You can see my screen now, Abby.
Yes, sir.
What's the major?
Let's manage it. Let's continue managing it. I'll have to let me split my screen. So once I'm off, I will know. I'll know myself. Yeah, so I was explaining the what's it called? I was explaining the recognition and measurement of the PPE. It's more. And I want us to solve one question, if not two. So measurement, I said there are two ways in which you can measure the item of PPE. One way is that the initial measurement and the subsequent measurement. What do we mean by initial measurement? When we're talking of initial measurement, initial means the first. The point at which you purchase the item, when you buy the item itself, that is the initial. The time you bought it, the cost as at the time the asset was acquired, that is the initial measurement. Subsequent measurements are those measurements that comes after, oh, this asset was purchased last year and it has increased, or the value has increased in the market. So let's try and revalue it. Let's see the cost now. Oh, that the cost of this item has gone down. Let's try and revalue it and know the current cost or current price of this item. That is subsequent measurement. And now the creation has set in, let's know the actual cost now. But the initial is talking about the cost as that when you acquire the asset. So when we're talking of initial measurement of a PPE, item of PPE are initially recorded in the account of a business, that is your company, in the account of your company at their cost. When we're talking of the cost, what is the cost? Cost is the amount of cash or whatever cash equivalence you paid, or the fair value of the consideration given to acquire an asset. Do we get it? That is, cost is the amount that you paid, or cash equivalent. In accounting, we call something cash and cash equivalent. Not necessarily it's cash, but they are cash equivalent. That is what you gave in exchange to acquire an asset. That is the consideration. Oh, if you give me your laptop, there's someone on this call called Afis. Afis, if you give me your laptop, sorry, Afis, if you give me your laptop, I'm going to give you 20 shares in my company. That is a consideration. They will still take it as what as the sacrifice you made in acquiring that laptop. It's still a cost. So what initial measurement is saying is that whatever you pay, if you like, leave one of your kidney to acquire a shares. If you like, leave one of your kidney to buy generator, Mr. Generator for your company. They will still take it as well. What is the value of that kidney? What is the fair value of that kidney? Fine. The fair value of that kidney will be the cost of that item. That is the initial measurement. You are not paying cash, Abi. What do you pay? You want to do this to get this in, Abi. What is the cost of that thing you want to do? That thing will now be taken. The cost of that thing, the value, will now be taken as the initial cost of the assets. That is one. Oh, I rendered the service. I gave him a massage for me to get the laptop. What is the cost of the massage? 50 naira. That is the cost of the assets. That is the cost of that is the consideration. That is that. So now, when we're talking about this cost, I want us to note something here, because I'm going to give you a question after this. When we're talking of the cost of the assets, the cost of an item of PPE includes, I want us to write this thing out. the cost of an item of PPE includes, we know the cost already. So how do you now determine the cost? Is there everything that relates to this will be capturing as cost? No. So the cost of an item of PPE includes, number one, is someone writing or you don't? Am I still there?
We are writing, sir.
Thank you, thank you, thank you. So the cost of an item includes, is someone writing?
Yes, sir.
Okay.
Yes, sir.
I wish I wish to throw this question to the house, but I don't have the time. Okay. The cost of, when we're saying the cost of an item, we know cost are what are those considerations that you paid or you gave to people in order to acquire the asset. No, sorry, don't let me jump. I explained measurement, Abby. Okay, I'm still explaining measurements. I wanted to explain recognition. There's nothing much in recognition. Measurement, we've explained the initial measurement, right? So when we're talking of the subsequent measurement, how should I take this? I'm coming. So I'm talking about cost. I don't want us to miss this thing before I listed the cost. Okay, initial cost. I'm saying what are those things that we need to take as the cost of the asset? The cost of the asset or the cost of the item includes, number one, is anyone writing? The purchase cost, that is the purchase price after deduction of trade discount. The purchase price after deduction of whatever trade discount they give to them. So what we're saying is I want to know the cost of my calculator now. Oh, how much do you buy it? 15 naira, but I was given a discount of 5 naira. You need to remove the discount. We need to know the actual cost. That is, the cost of an item of PPE includes the purchase price after deduction of trade discount, plus any import taxes or non-refundable sales tax. Did we get that?
No, sir.
Do we get that?
Yes, sir.
Okay. The
Refundable
initial cost,
taxes.
the purchase price, this material should even have it now. I'm coming.
The purchase
Okay.
price after deduction of the trade
I've seen it.
discount
You can see
plus
my screen. Can
any
you see this
import
material?
tax. Yes.
Thank you. Thank you. You can see it on my screen. The cost of it doesn't change. That's the cost. The cost of an item of PPE includes or consists, any word you use, the purchase cost or the purchase price after deduction of trade discount plus any import taxes or non-refundable sales tax. What is non-refundable sales tax? What is sales tax? Accountant in the house, what is sales tax? We don't have much time. Okay, sales tax is the same thing as value-added tax. Value-added tax act is the one that replaced sales tax in Nigeria. Are we together? So
Yes.
before now, value-added tax are regarded to as sales tax, but now value-added tax act came in, what year is that? Okay, so what you need to know is that value-added tax replace sales tax. Thank you. So plus, that is one. Oh. Number two is that any any directed attributable cost of bringing the asset to its location and condition for it to be capable of operating in the manner intended by the management. What is this in saying? That is, any other cost you incur in bringing the asset to the location in which it will be used, and all other costs that you incur to ensure that these assets are made available for usage. I'm going to cite an example. We said the cost of the PPE includes the purchase price. Oh, my calculator costs, I'm citing an example. I don't want to use calculator. Oh, we bought a generator, a Lisa, Meccano, let's say Meccano. We bought a Meccano from Saudi Arabia. They're going to deliver a Meccano to us from Saudi Arabia. Did I use Saudi Arabia? No. Okay, Saudi Arabia. Meccano from Saudi Arabia. We're giving a discount of 5%. You want to know the cost of the PPE. You start from that. How much is the Meccano? Meccano is 1 million naira. we're giving a discount of 5%. What's the 5% of 1 million naira? Whatever it is, minus the 1 million, that's what we're paying. That is the what? That is the purchase cost. Plus any import taxes, whatever import taxes you pay, you add it to what? You add it to the cost of the asset. Because let's say the cost of the asset is 15 naira, discount is 5 naira, you remove the discount, then you have to pay import taxes because you are importing it. You add it to the cost of the asset. If they ask you that what is the cost of the asset, you will not be saying 14 naira again. You are going to add 15 naira that was charged as the import tax to it. Oh, what is the cost? 19 naira, because the supplier sold this thing for 15 naira. We're giving a discount of 10 naira. We paid import taxes of 15 naira. That's 19 naira. The cost of this asset is what? 19 naira. If there's a VAT, add it to it. So, and again, the cost doesn't stop there. They are now saying the directly attributable cost. What do you mean by direct? That is the cost that you incur that is directed to the acquisition of the asset. For example, when the asset got to is it airport that all these things or seesaw? I don't know. Okay, if you order something for people that do Temu, if you order something from abroad, where would they deliver it to at first? Where will you get it? Let's say Eco see something. The item got there, you've paid import taxes, you've paid everything. Now, the other directly attributable cost of bringing the assets, you see that caption, bringing the asset to the location means that the asset was delivered to a co-seesaw or something. You need to take this asset. You're not, the asset is not going to be used in that place. You're going to take it to where? To your company's premises. So the cost you incur to take the asset to its location from that eco seesaw or something to your company that is in Lekki, that cost will add to the cost of the asset. That is one. Any other cost you incur again to ensure that this asset is in a workable condition. That is the manner. Oh, we have a generator. You cannot just, oh, we've gotten it from Saudi Arabia, we've taken it to the company's premises. Is it going to start working now? No. What do you need to do again? We need to call electrician to come and fix some wires. You need to call someone to come and install something. All those costs that you are incurring again are directly attributable to the cost of the assets. You are going to add it to get the actual cost of the assets. I hope someone is getting what I'm saying.
Yes,
Am I going again?
No, you are
No,
still
sir.
very much
You are
there.
still here.
Do you understand? I hope you understand those two things.
Perfectly, sir.
Yes, we do, sir.
Yeah. So this is now saying there are some costs that are directable costs to initial cost of the asset. Number one, you have a generator. They just invented one generator in Saudi Arabia now, and you've gotten it. It got to your company premises. The electrician has installed whatever he needs to install. You know, said another cost that you can incur that you can have to the cost of the asset include employee costs arising directly from the installation or construction of the asset. After the installation of this generator, none of your staff has ever used this type of generator before. So there's a need for you to do a training. Oh, go and bring them there. The training is solely, there's something in translation we call WREN. Has anyone heard about WREN before? WREN. Have you heard about WREN before?
No, sir.
No. So what we mean by WREN is that you measure whatever cost you incur by the WREN principle. What do we mean by WREN? The W stands for wholly. Is it wholly they call it or woolly? WHOLLY. Woolly. Abi wholly. Who correct me? Najat. Where are the linguistic students in the house? Is it woolly or woolly? Okay, no time. So is it that I'm not no one can hear me or what? I'm scared of this
We
network.
can hear you clearly, sir.
We can hear you very well.
Okay, the W stands for woolly and the R. R stands for what? Reasonably. You incur a cost and it's not reasonable. Like, I incur a cost. Okay. When we are working, I decided to buy chewing gum. Is it reasonable? No. But when we are working, the staffs were tired. We need to buy them lunch. It's reasonable. So reasonable is the R. Why the E is what? What's the E again? Entirety. That is entirety. If you incur 5 million naira, all the 5 million naira is directly related towards to the installation of the plant or the generator. You cannot say, oh, from the 5 million naira, manager collected 500,000. He said he's tired. He needs to do something. He needs to book an hotel and take his girlfriend. Something that is not. I think the whole 5 million naira that you are trying to substantiate so that you can add it to the cost of the asset, they are not only, or the entirety of the money is not for the asset. So that is the entirety, and the end is what necessary. There's a need for us to incur this one. It is necessary. The staffs are tired. We need to feed them. I hope you understand. That is the working principle. So we're not saying this cost attributable may include employee costs arising directly from the installation or construction of the asset. That is directly. Employee costs they are saying here is that, oh, if we do not incur this cost, there's no how the staff will know how to do this thing. Number two, the cost of site preparation. Number three, delivery costs. We've explained that the transport costs you incur. That all these costs must be directly to the PPU. You cannot say, oh, when we're coming, you now branch at one vendor, at one customer again to ask for debt is owing us. No, only for this thing. Installation and assembly costs. We've explained that. Testing costs. Let's test this thing first. Is it going to work perfectly? Those things. And lastly, professional fee. Professional fee are those costs. Oh, okay, you bought generator, call an electrician to come and test this thing. All these things are those professional fee. They are professionals in their own field. None of your staff can do this thing. You need to what? Engage them. Are we together? You need to engage them. So from the explanation I just gave, so another cost I would like to add is what we call cost of dismantling. Cost of dismantling. I hope someone is writing something. Cost of dismantling and any other attributable expenses. Whatever icon is listed here, this list is inexhaustible. There might be other. That was why I gave you a William principle for you to measure this. Is it in line with all these things? If it's in line, fine, we can add it to the cost of this asset. So I'm going to share this question. No, before I go there, should I share? No. Okay. In your book, in your book, this is a question. This question says, as you're seeing this question, please be solving it straight up and send the solution to the platform. I need it real quick. A company has purchased large item of plants. The following costs were incurred. Number one, they said list price of the machine, 1 million naira. Trade discount given to the company, 50,000. Delivery cost, 500,000. Installation cost, 125,000. Cost of site preparation, 200,000. Architect fee, 15,000. Admin expenses, 150,000. I need to know, what do you want to determine here? Do you want to know the cost of the asset? The cost of the asset is what we want to determine. Please do it in your book and snap and send to the platform. Don't send to me, send to the platform. How to see everyone solve these things. We have less than 15 minutes. This class needs to end by 10:45. People are going to work tomorrow. Oh yeah. Solve and send to the platform. We have 2 minutes to solve this thing. This is 10:31. By 10:33, I want to be seeing answers. But I need to do the subsequent recognition, and we need to do subsequent measurements and recognition. Then we'll call it a day. I have other questions I want us to solve as regard this, but we can do that on Tuesday. Are we solving already?
Yes, I will solving.
Oh yeah. We have 1 more minute. This is just a free, based on the explanation I've given so far. You don't need to go around, you don't need to run helter skelter. Just do this thing. It just plus and minus. Less than 60 seconds. Time up.
Yeah.
I know it's time already, but I'm still waiting for people to send. Or I have lost my network again.
No, you
No,
haven't,
you
sir.
can't.
Alright. I've not seen anything.
You haven't, sir. There's actually no light, so I will have snapped my own, but I'm done.
What is the answer?
1,390,000.
90,000.
Like that, you said you have 1,545,000. Are you on this call? Sunny, you said you have 1,395,000. Oh, I'm scared of this network. Oh, I need to show my screen. 1 minute. Oh. Okay. I think it's fair now. The network is kind of okay. A little. Let me split my screen. Okay, I'm going to call names. Like that, he said you have 1,545,000. What's this name? Chioma, 1,390,000. Sunny, why did you delete your answer? I've seen it already now. You said you have 1,395,000. Why you on it to? I've seen it. Chisholm, 1,390,000. Thank you, Chisholm, for this. Okay. So from the answers we've gotten so far, we have how many people on this call? We have close to 40 something people on this call. And I'm only seeing 4 answers. Okay.
I said mine verbatim.
Okay. Other platform, Abby, I'll check.
So no,
Quadri.
1,390 because there's no light to snap it.
Okay.
But I've done it in my booking. Yes, 390,000.
SARS 1,390,000. Thank you. So a quick one. I'm okay with what I've seen so far. But number one. Where is this? The question is saying, let's start from the first person. The first person says the answer is 1,545,000. You are wrong. And for those that are just copying the answer from the material, that's this I don't like using material. If you copy answer from material, you're not going to see the material on the exam day. That's one. Number two is that do it. It's better for you to do the answer and you are wrong and you are being corrected in the class than they got 1,390,000. You went to write it or you drop it. You copied and paste it. You cannot copy and paste in the exam. Sorry. So 1 million. The answer is 1,390,000. Not to waste much of our time, but I'm going to explain how we arrive at that. We said this is the cost price 1 million, and this thing is saying the cost price less trade discount. A trade discount of 50,000 was given. You less 1 million from 50,000. I mean, less 50,000 from 1 million. You have 950 million.
Yes,
950,000. This is what they've got. And there's a delivery cost. Delivery costs are part of the cost of bringing the assets to its location. Are we together? Of bringing the asset to its location. So delivery cost of what? Of how much? Of 50,000. Sorry, of 100,000 will be
100,000.
Installation. Yes. This is when I said you need to install the asset so that it can be in a workable condition. Installation is what? Is part of what? Important cost. Cost of site preparation. I intentionally mentioned this. It's here. 125,000 here. And again, the last one, the architect fee. Architect fee is part of what? It's a professional fee that they pay, which is what? 15,000. Admin expenses. What do my administrative expenses? These are the salaries of the staff. These are the lightning. These are the we know the meaning of administrative. There are so many expenses in administrative expenses. It might even be the money for your lunch. Maybe your company provides lunch. They might be regarded as staff benefit and other admin expenses. staff overhead under admin expenses. So admin expenses, the cost, that's what I was saying, the costs that are directly attributable to this asset. Architect fee is in respect of this asset. Cost of site provision is in respect of this asset. Delivery is in respect of this asset. Admin is not in respect of this asset. So admin cost will not be added. Are we together? That is that about that. So let's move to, I'm going to give us, I hope what that clears. So let's go to someone gave 1,395,000 also, aside from 1,005,000 something. I hope you understand that now. So I want to mention something so that we can wrap up this class. The subsequent recognition. Hello.
Yes,
Yes,
I
I
can
am
hear you.
Okay. We understand the initial recognition now. I believe we understand the initial recognition. I want to give us something. Can I remember first?
So you
Okay,
made
as I'm
mention of
taking
cost of dismantling.
Ma,
You made mention of cost of dismantling.
when
You made mention of
Yes.
cost of
Cost of
dismantling. I don't understand
dismantling.
what.
yes, cost of dismantling is part of the directly attributable cost. I just gave us that. We might see it in other texts. That was the reason why I mentioned that, and I've given us the principle we can use to measure this thing. You can use the Wigan taxation principle also. Is this cost? Is it directly to this clinical? Is it the entirety of this money? Is it for this? So you can use that also, though it's from taxation. It's from taxation.
Okay.
So the more you read about most of these things, you like most of these things are interwoven. So I will still remember what I wanted to give. I will remember. So let's go to subsequent. When we're saying subsequent measurements, subsequent measurements include, that is, as the asset is currently being used, there's a need for us to measure this asset again. We know the cost, we know the amount we purchase this asset, we know this, we know that. So there's a need for us to, this asset has been in our company for like 2 years. There's a need for us to know the value as of today, the cost of this asset as of today, after taking note of all other things like what are those things that can happen to the asset for your asset to have been depreciated or lost in value. Can someone give us that?
Wear and tear, sir.
What is
If
it? Wear and tear.
what I'm like usage after using it for some period of time, it was how will I put this thing? Like maybe it has hit okay, let's give as an example as maybe it's the machinery, like maybe it's a vehicle that they are using to deliver the goods. So let's say
Okay.
the front glass is a bit broken or something. So
They
that's
need
what
to
I mean.
change it.
Yes.
Thank you.
And they haven't changed
So
it and all.
yes. So if you want to say that that moment, the cost will not be as, hello.
We are with
Yes,
you.
sir. You are
Yeah,
correct.
it won't be as
All
huge
right.
as what you are
I just
expecting.
need to confirm. Sorry. I just need to confirm. So let's leave that. I'm saying the subsequent recognition. Those are expenses that you incur after the purchase of the asset. All of these costs, that is the other costs that you incur. You've when you are buying this asset, you incur all these costs. So the expenses you incur after you've purchased them, those expenses will be capitalized. And they are used. Well, how do you even know? Because let's say, for example, my sister started an exam the other time, like, you're using a vehicle to deliver goods, and the glass is kind of broken. This glass that is broken, it has reduced the useful life of this asset. All this road safety, if they see it, they might be like, this company is not, this vehicle is not, they use one motorable for something use. No, it's for
It's
them to
not
make money.
roadworthy.
Thank
It's not
you.
roadworthy.
Thank you. This will not catch you before, eh? So they are not roadworthy. So they'll be asking you for roadworthiness. Nigeria, we're in Nigeria now. So this vehicle is not roadworthy, all this stuff. But you are like the roadworthiness value that has depreciated, the sort of the glass that has broken, or the tire that is no longer functioning well, or something like that. But now you now discover that if we change, what if we change all these things? Your company now decided to change all these things. Tell me, if this asset is meant to use just 1 year, let's say initially the asset is supposed to use 5 years, but because of all those items, all those challenges, and it's in its final year, it's in its 4th year of usage, which is the final year. Your company now, oh, let's do this thing, let's change the engine of this motor. You now change the engine. Now tell me, the asset is not going to use 1 year again. It's not going, the useful life of the asset is going to increase because you are bringing a new engine into it. It's like you just bought a new one. You don't know how to, there's a need for you to now revalue them. Oh, there's a new engine in this car now. That means it has increased the useful life. It has increased the operational efficiency of these assets. Those are subsequent measurements. That is what subsequent measurement wants to do for us. The expenses you incur after you purchase the asset. Whatever cost, that is, the cost you incur will be capitalized to the what? To the cost of the asset. Any cost you incur at that moment will be capitalized. Those costs are those costs that you incur to increase the useful life of the asset, to upgrade the asset, to improve the asset, improve the operational efficiency of the asset. Those are the costs we're saying in this subsequent expenditure. That is the subsequent measure. Those are the things that leads to subsequent measurement of the asset. Are we together?
Yes, sir.
Yes, sir.
So for subsequent measurement, do I have any question on this thing? We can't even solve question on that thing. Okay, subsequent measurement incurred on PPE are in 2 ways. One is recurrent expenditure, and the other one is capital expenditure. Calm down. Recurrent, from the word recurrent, that means you are going to be spending that amount. Recurrent, it will keep coming. Recurring. In recurring expenditure, let's say you have a generator that you need to service every month. You know, the service cost comes every month. That is a recurrent what? That is a recurrent cost. And those costs, you are not going to capitalize those costs. What do we mean by capitalization? Capitalization means that whatever cost you incur will be added to the cost of the asset, like we've done in these ones. All these costs, we could have expensed them. In your P&L account, you could have expense all these costs. Oh, charge it to P&L, charge it to P&L. But no, you're not charging it to P&L. You're adding them to the cost of this asset. But subsequent measurement is saying there are some costs that you incur as you use this asset. There are subsequent. So subsequent subsequent measurement is divided into 2 ways. We have the current expenditure and we have capital expenditure. Are you getting it? Or I need to type. We have something like that.
We are getting it.
Okay, I'm not even sure the material is saying something like that. Okay, so the current expenditure are example of all those example. Let me start the example now. Running costs, maintenance costs, you need to service them, you need to do this. Running costs, maintenance costs, all those costs are the current expenditure. All these costs that we're saying, they are going to be written off as an expense in the profit or loss in the period in which they occur. Do we understand that part? What we're saying now is that in this financial year, we service this generator, we're paying for that. That amount that you use to service that generator will not be added to the cost of the asset because it comes every month. You service it every month. That amount will be expense. When you expense it, you are charging it to the profit or loss. It will reduce your profit. If you make profit of 1 million naira and whatever maintenance cost you incur is, let's say, 50,000, it's going to reduce your cost. But all these ones are not going to reduce your profit. They are going to be added to the cost of the asset. So when they ask you that, what is the price of this item? You will not be saying 1 million naira again. You are going to tell them it's 1,390,000 after taking note of all these things. But subsequent one, if the subsequent one is a recurrent expenditure, like a maintenance cost or a running cost, you are not going to add it to this cost again. They are going to be expense to reduce your profit. Now, that is for recurrent expenditure. Now, capital expenditure. When I say capital expenditure, they are the ones that you incur to improve the performance of the asset upgrade, or extend the life of the asset. Are we together? These ones will not be expense. This one, let's say you have a motor vehicle that you use to supply goods. Then you now change the engine of the motor vehicle. You change an engine, the whole engine. You ask yourself, this engine that you change, what is it doing? It's going to improve the asset. Let's say the useful life of the asset was 4 years before, and you are in its third year, and you change the engine in its third year. You've added, let's say, you now value this engine that you added. How many years is it going to add again? Let's say 2 years. Yeah, that means you've extended the useful life of the asset. That means that cost is not going to be expense. You are going to add it to the cost of the asset, like you've done to all the sums. That is what subsequent measurement is saying. I'll move out of the subsequent measurement now. I hope we understand that. Oh my God, my network.
Yes, sir.
Yeah,
Yes,
no,
sir.
you are with you. Your
You are,
network
we
is
are
okay.
with you. You are with us, sir.
People scared me. All right, that is subsequent measurement. We understand the recurrent and we understand the what's it called? We
The
understand the
capital.
capital.
For the
Yes, thank you.
capital, can you please recall on that capital,
Okay,
please? Just give us
I'm
a
going to give an
simple definition. Thank you.
example. Is it definition? I'm just explaining. Okay,
Definition
there
and
are
example.
Example for the capital
okay.
expenditure.
There are those costs that you incur to improve the performance or upgrade or extend the useful life of the asset. And you can actually say there are those costs you incur to improve the operational efficiency of the asset. Anyone you choose. And the example is that the motor vehicle that you use to supply goods, the company change the engine of the motor vehicle. Imagine, change the engine, the whole of engine, like even if it's half engine itself, you change the engine of the motor vehicle. That what you do, that cost that you incur will be capitalized. You add it to the cost of the motor vehicle. Let's say the motor vehicle now is the value is now, who is that now? Let's say the motor vehicle is 1,390,000 as it is there now, and you now change the engine in the third year. You are going to add that 1 million naira engine that you bought to this cost. That will be the new cost of the asset. Are we together? That is that about that. I wish I can give an example, but time has gone and people are going to work tomorrow, including myself. So that is subsequent measurement. I hope you understand that.
Yes, we do.
Yes, sir.
So I'm going to quickly do something now. I need my Excel to show us how subsequent measurement, how we do subsequent measurement. Or an initial measurement. Let's say for initial measurement, we say this is how you do. We understand initial measurement calculation now. You have the cost, you will have the cost of the asset. Abby?
Yes.
Yeah.
Yes.
Yes, sir.
That is for you to get the cost. After you've gotten the cost for that asset, the cost is 1,390,000 that you people got, Abby.
Yes.
Yes.
Yes, sir.
Then we want to know the cost of the asset in a particular year. What do you do next? You do what? Less depreciation. They will tell you the depreciation method they use. You want to know the cost of that at the end of that year. You know the cost of it. This is the cost, acquisition cost, and every other cost that you incur. But there's a need for you to take note of depreciation. Less depreciation. We've not done depreciation, have you? We've not given definition for
Yes, we've not done it, but we have an idea on it.
Yes, I know. That's why I didn't jump into that. So then let's say the depreciation is 5. The depreciation for this period is 500,000, 5,000,000 or something. Then if it's, let's say it's an intangible asset, for example, then what again? Can someone give me what I'm about to write? Less impairment. There's no time. Let's say the impairment is so amount also.
Yeah, 30,000.
Okay. So what is now the cost of the asset at the end of the period? That means 590,000 is the closing. That is, they will call it carrying. What they will ask you, like, what is the carrying amount of the asset? This is how you arrive at your carrying amount. Are we together? You know the cost.
Yes.
Before you can get your carrying amount, that is, this is the amount you are taking into your statement of profit or loss for the period. Sorry, the amount you are taking into your statement of financial position at the end of the period. 590,000. We know the cost is 1,390,000. You've taken cognizance of depreciation. And if it's an intangible asset, you do what? Impairment. Then you have 590. If it's a plant and machinery or something, you know you're not going to do impairments. I'm just saying, if should I even remove it so that it will not be confusing? Okay. If it's for plants, you are going to do depreciation. Whatever depreciation, then this is the carrying amount you are taking to the statement of financial position. If it's an intangible asset, let's say goodwill, instead of this depreciation is going to be what? Impairment. And you're going to have your carrying amount. So this is the initial measurement. Let's now say subsequent one. So this is at cost. This one that we just did now, it's at cost. That is when you purchase the item initially. Cost. So then I'm going to do a revaluation. You've changed the engine of the generator and you need to revalue it at revaluation. What is the fair value? This is what you take note this is what you take note when you're doing evaluation. Oh, fair value less depreciation. Then whatever you have will be your what? Will be your carrying amount. If it's intangible, it's going to be what? It's going to be impairment. Whatever you have here is the carrying amount. That is at evaluation at cost. Are we together? At evaluation at cost. Are we okay? Hello?
Yes, we are together.
Yes.
Okay. And lastly for today, we have 6 minutes. This is to 11. God. Sorry everyone, it's because of the network. So I said I wanted to mention something to us. I just remember now. So when you are recognizing costs, there are some costs that are not part of the initial cost, that are not part of the initial cost of PPE. I've given us the cost, all these ones that we listed, installation costs. I mentioned pre-operational costs that you incur, cost of dismantling. Which other costs did we mention? Who is there? Hello?
Professional fees.
Professional fee. Are we sleeping already?
Cost of site preparation.
Sleeping.
Okay.
Installation cost. Delivery
costs.
So as we have all of those costs, I can't will not just give you the question we solved. I can't just give you the study part just showed the cost. I can mix the cost that should not be added and the cost that will be added, and it will be so confusing. So I'm going to list the costs that are not going to be part of the initial cost of PPE, and I want us to write. Number one, I'm not going to pick it twice. So number one, training costs.
Sir?
Training. Sorry, I can't pronounce
Training cost.
Training cost. One. Number two, administrative cost. And number three, cost of introducing new products. Example, let's say adverts or promotion. Those three costs, if they add it, you are not going, if they put it in the question for you, you're not going to add them as the cost of the PPE. Admin cost, cost of introducing new products, training cost.
Is that the only thing, sir?
What is it?
You gave us
Is that the only cost?
Yes, and I'm explaining like any other costs that are not directly related to what? To the item. They might list other things though. That was why I said they are not related to these things. So it's none of the item concern.
Thank you.
We have 3 more minutes. And I'm going to give us this last one. Sorry, I'm taking you guys around trying to remember. Okay, hey. I've given us the course that will not be. I was saying something about recognition and measurement and recognition. You never mentioned. We only mentioned measurements. What about recognition? How do you recognize the course of PPA? So, our initial course of PPA should be recognized. That is the recognition criteria. There are two criteria that the item must meet. Number one, criteria one. Is someone writing?
Yes.
That is, it must be probable. It must be probable that future economic benefits associated with the asset will flow into the entity. That is number one. If number one, I'm going to take it again. It is probable that this is recognition now. This material should even have. It is probable.
Okay. Continue, sir.
It is probable. Abi, if you want to use it, must be probable. Use it. It is probable that future economic benefits associated with the asset will flow into the entity. That is number one recognition criteria. Number two, the assets can be measured reliably. The assets can be measured reliably. That is the two recognition criteria. Number one, it is probable that future economic benefits associated with the cost of the asset, will flow into the entity. And number two, the cost of the asset must be measured reliably. That is, you cannot tell us that you buy an item without you knowing how you can measure the cost. Now, the example they gave us in this study pack, they gave us the cost, they gave us the delivery and everything. And someone is telling you that they buy this item and they do not know how to measure the cost. No, you must be able to know how to measure the cost of the item you are buying. That is that is one of the recognition criteria. And the other criteria is that it must be probable that this item that we actually purchase, when we're using them, they are going to bring economic benefits for us. For example, the motor vehicle that we bought. What is the economic benefit? We're using it to supply our customers. Is that not a benefit to the company? It's a benefit. Oh, the generator that we bought, we're going to use it to power the factory. It will ensure a smooth production process. That is the two recognition criteria. Thank you, everyone. I'm going to share some questions. I might have questions, but time, no problem. Lastly, I want us to go and read the lesson. The presentation is not new to us, even the title of the presentation. Okay, next class we'll do disclosure requirement of PPE and also the presentation. Then I'll come with questions. We can use the next class for questions so that we will not be jumping. Thank you, everyone. Thank you for your time. Thank you for your patience. And thank God on Nigerian network. Thank you. You're all welcome.
Thank you, sir. God bless you.
Thank you, sir. God bless you.
Thank you so much, sir.
Thank you, sir.
Good night, everyone.
Good night. Bye.
Bye.